Should we buy or sell the Canadian stock market ETF? So first off, read this disclaimer carefully. And do your good deed of today by liking and subscribing. So Canada, it's 10% from the 52-week low, 15% away from the 52-week highs. So we have seen a decent bounce. So let's look at the charts here. So these are weekly data points, very much big picture. And something you can see is that between 2019 and our present time, the Canadian stock market has had many bear markets. Here we have minus 29% bear market. Here all of a sudden we have another bear market, 44% down. Between this period and here, 27-ish. So bear markets and bull markets are very common in Canada. So if you were to be good at timing these moves, you could substantially outperform the S&P 500, but by being long and also short when the time is right. Recently, we have seen that the bears are basically in control. And we have a clear rounding top pattern here for Canada. Recently, we have seen some bounce. If we look at these indicators, we do see that the purple 20-day moving average, it's been quite favorable to the bears and also the bulls. So it is a very important moving average going forward. On Friday, we were rejected from that moving average, so that's a bit of a hint that the bears are still out there. We are emerging from a relatively low level on RSI and the PPOs. If you look at previous rallies during this downtrend, RSI usually gets a bit higher before we get a pullback. Before we make new lows. So there's that. Looking at accumulation distribution, it's also relatively strong, so there are definitively buyers out there. So in my notes, I write the 20 daily moving average resistance. I give the bears a 4 here on the technicals. So as long as this signal is in play, the bears, they just have an advantage. But obviously, if we were to break out above the 20 daily moving average and close above, that would be problematic for the bears. I think the biggest benefit here for the bulls is that we have seen that during previous rallies, RSI usually got higher, so that could embolden the bulls to maybe push on a bit, notwithstanding the 20 DMA resistance. So let's look at the seasonality. So here to the right, we do see that there usually is a bit of strength into mid-September, but then we do see some significant weakness into the later part of September. To the left here, over the last 5 years, September, it is a mediocre month, and October is the weakest month. Over the last 10 years, September is a 50-50 month, but on average there is a loss, and October is the weakest of all months. The last 20 years, we do see that September, it's a decent month. We do close higher 60% of the time, on average 0.3% gain. But October is one of the weakest months for Canada. As such, this is a bit of a messy situation for both the bulls and the bears, because on the one hand, yes, September could have something in it, but as we saw, that usually is in the earlier part of September. In the later part, we usually see weakness. So I think, given all of that, and especially given that October is one of the absolute weakest months, I will give this one more to the bears than the bulls, but obviously the seasonality here, it is a bit messy. So let's look at the fundamentals. So we are comparing Canada with America. If we go here to performance, year to date, Canada is outperforming the S&P 500. Looking at beta, it's a bit higher, PE is a bit lower, the yield is slightly higher, but basically they are pretty similar. Looking at the holdings, 90 versus 507. Here you can see the sector breakdowns. Finance is very big in Canada, but then you have energy minerals, and you also have non-energy minerals. So basically, Canada is much bigger on natural resources as such, while America is much bigger on how you can basically transform these natural resources into products. Okay, if you look here at market cap, yeah. So basically, you could make the case that there's a bit more value in Canada. From a fundamental perspective, it is slightly more interesting than America. I think I would give the bulls here a 2 on fundamentals, but there's nothing really exciting in Canada when it comes to fundamentals either. So let's look at correlations. So we have 96% positive with the S&P 500, 82% with United Kingdom, and also 82% here with crude oil. Minus 8% with the dollar index. Daily data points, 89% with the S&P 500, 92% here with United Kingdom, 17% positive with crude oil, and minus 82% here with the dollar index. And looking short and long term, yeah, I think we could say that the strongest correlation is with the S&P 500. So what happens with the S&P 500 is very likely going to affect Canada. So here is the S&P. We have seen a bounce here as well. The week that's passed, it was a decent week, but it's a very bouncy week. If we zoom in a bit here on the candlesticks, we see that the low, the filled part here of the candlestick, it's at the same level, but the low end here was a bit lower than the previous week. So while the conclusion of the week was bullish, there were bears down here. So it was not like a clean win here for the bulls. Yeah, but we have seen some nice bounce here. Let's look a bit at RSI. I mean, there is some possibility of more upside here for America. Let's look at the weekly data points as well. I mean, it wouldn't be shocking or even disturbing here to the bears to see more rally in America. The key thing for the bears is to definitively make sure that the bulls do not get above this blue 100-week moving average. On the daily data points, the 20 daily moving average, it would definitively be beneficial for the bears to really make sure that the bulls get into a lot of trouble there. So here is Canada against the S&P 500. So this is rather interesting because, let me just draw it in. If we look back here, this is where we had more of a consolidation pattern, and then we had some massive outperformance from Canada. We had underperformance back here, recently had a very protracted period of underperformance. But recently, there is some kind of consolidation pattern similar to what we saw back here. It's potentially interesting. It could mean that Canada might outperform America going forward. We have seen that, in the past. If we go here to the daily data points and look a bit here at the seasonality. Yeah, so over the last 10 years, yeah, it's a bit 50-50 really. In blue here over the last 7 years, yeah, and also green over the last 5 years. There is some slight tendency for Canada to outperform America, but generally speaking, America usually outperforms. I think I will give the bulls a 5 here on relative performance. What I found especially interesting was this major relationship, between the pair, Canada and America. We have gone from a protracted downtrend to now having more of an even battle between these two markets. We have seen in the past that Canada can massively outperform America in times where natural resources are the king, and given the geopolitical situation, I think that natural resources and having natural resources, it's going to be very beneficial going forward for Canada. Way more beneficial than having the results of the natural resources, the chips and the like, because there is a certain moat, with owning the natural resources. So yes, we could have a major trend in favor of that. Overall, we end up with a 0.3 here in favor of the bulls, But it doesn't change that the key entry signal is bearish. It's the 20 daily moving average resistance. So that is still sort of in play here. So the overall setup here for Canada, it's noisy. But as we saw, previous rallies usually pushed RSI a bit higher than what we currently have, and that could embolden the bulls a bit. So we have some time left. So let's just scan through the charts, look for opportunities in Canada, interesting setups. Of course, in order to make a decision, you have to do a holistic analysis where you look at all of the other stuff. But this is pure technicals. So here is the Royal Bank of Canada. And what is interesting here is that the purple 20-week moving average is a clear resistance level. If we go here to the daily data points, the absolute key level in this case is certainly this blue 100 daily moving average. It's been a magnificent level for the bears to put on short positions. So it definitively will be interesting to see what the bears do if we get up there again. But yeah, that is the key setup here for the Royal Bank of Canada. Here is Toronto Dominion Bank. These are weekly data points. We can see that historically speaking, this blue 100-week moving average has been a huge deal. We see it back here in 2018. Here, see the surgical rejection here before the plunge in 2020. So the blue 100-week moving average is obviously a very, very big deal. And recently, yeah, guess what? It's been a big deal. A very good level for the bears. Currently, the bears are using it. We are seeing rejection. On top of that, you have the purple 20-week moving average that also is a pretty good level for the bears. Going here to the daily data points. So the 100-day moving average here in blue is interesting, but we don't have that clean relationship with that moving average. From a more bullish side, you could make the case that this looks a bit inverse head and shoulder-ish, but it's a bit of a messy inverse head and shoulders. Here is Bank of Montreal. In this case, we do see that the key level on the daily data points is this green 50 daily moving average. So let me draw it in. Short, make money, short, 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 maybe. There was some shorting on Friday. If we zoom in here, we see that there were rejection here at that moving average. So it is a very shortable moving average. But we have seen, if you look back here in early August, yeah, the Bulls were able to have a bit of a breakout, but the Bears, they came back with a vengeance. But basically, there is a resistance level here. There just is. You could also argue that we have a very substantial head and shoulders pattern. Depends on how you draw it, but something around here is a pretty substantial head and shoulders pattern. Here is Canadian Natural Resources, very self-explanatory business name. We do see some interesting price action here. The latest candlesticks have been very much coiled. You see that they engulf each other. So there's this build-up of energy here. So major battle basically between the bulls and the bears. Let's go to the daily data points. Yeah, so it's a major battle here around the 200-day moving average. So let's look at some of the other indicators. I mean, accumulation distribution is looking healthy. And MACD here on the weeklies, really close to sending like a major bias signal. On the daily data points, then we do have some deterioration in the MACD. Accumulation distribution is relatively strong, and there's a bullish divergence here actually between price and that indicator. So interesting things here in the natural resources space, but these kinds of patterns where you have this major battle between the bulls and the bears, unless you get in as a bull on the low end or a bear on the high end of those kinds of ranges, they can be very frustrating because there's a lot of jockeying and they can take some time until they are resolved. But when the resolution comes, it usually results in a pretty big move. So definitively, we do have some interesting action in Canada. Looking at the ETF and looking at the stocks in the ETF, we definitively have some major setups. But overall, I do think that there were more bearish things happening underneath than bullish. The only thing that could help the bulls, it's if we do get some breakouts above these resistance levels, because that will definitively make bears close out short positions.